Cramer. Welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to make you a little money. My job is not just to entertain, but to explain, figure out how days like today could even happen. So call me, 1-800-743-CNBC, or tweet me at Jim Cramer. The cynics just can't believe what's happening in this market. They're so used to finding reasons to be bearish that they're being overrun by positive events. They are genuinely baffled by the tape on this terrific day where the Dow gained 617 points, S&P jumped 0.85%, and the Nasdaq climbed 0.72%, with all three averages closing at record highs. Bye. Can these negativists stay baffled? Will they have to convert, get bullish? I don't know if they can do it, but they're going to have to if they want to stop losing the money that they have under management. And by the way, keeping assets under management is the name of the game on Wall Street. Before I get to what happened today, let me go into why it is so hard to convince the pessimists to turn positive. It's the toughest thing to do. First, ever since the great crash in '87, the most quoted of commentators and money managers have almost always been bearish, maybe extremely bearish, and of course, erudite. There's a sense that you simply aren't that smart if you're a bull. If you're too positive, people just don't take you seriously. You're a gadfly. It's only gotten worse since the Great Recession, when things really went kerflooey, and those who were bullish during that period, well, they were annihilated. How were they annihilated? They were annihilated by YouTube clips of them saying anything good about any stock under the sun. So why ever bother to say anything good about a stock under the sun? Why ever be bullish? Second, we do admittedly have a fraught backdrop, $37 trillion in federal debt, president that can sink the market with a single true social post, and the rule of law for many seeming to be in doubt. Third, does it really make sense? Does it make sense to be bullish as China, Russia, and India get closer while our country seems hard-pressed to find allies? You look at the headlines. Sometimes it feels like the world's spinning out of control. The war in Ukraine is not ending. The war in Gaza is not ending. We offended the Koreans with this Georgia ice raid, and on and on and on. To which I say, hold on. We don't trade on Ukraine. I'm not thrilled to see Russian drones over Poland. But it doesn't matter to individual companies and their stocks. We can't sell stocks off a budget deficit, especially when interest rates are going lower, as they did today. The skeptics think that's insane. Everything I just said, they want to sell stocks on current events, especially this morning's slightly hotter than expected consumer price index number. How the heck can Treasury yields come down on a bad inflation reading? That's not supposed to happen. They are baffled. But at the same time, we got that CPI number. We got an initial jobless claims number of 263,000. Experts were only looking for 235,000. But there it is again. I mean, come on, that's a bad number, right? When you're using a bullish prism, you focus not on the CPI, but on the jobless claims, and that number cements the possibility of not one, but multiple Federal Reserve interest rate cuts. Which brings me to the painful truth about the bear camp. The bears simply weren't in the business or weren't even alive the last time we had a market like this. You got to be old enough like me to remember. They don't realize that you can have sessions where amazing things happen. I told you this was the year of magical thinking. In the 80s and 90s, it used to happen all the time. Consider just the last 24 hours. The list of amazing things is myriad, just myriad. First, we saw one stock add hundreds of billions of dollars to its market cap, not on earnings, not on sales, but on a forecast. Oracle, not that long ago, was a slow, steady software company before deciding to reinvent itself as a fast data center builder. A couple of years later, and Wall Street accepts the fact that Oracle is going to be the biggest data center builder. It requires a total suspension of disbelief, and that's something that the sardonic cynics, that's a good one, sardonic cynics can't and won't accept or even appreciate. But that's really the point, isn't it? Some can't believe, some don't want to believe, still others think it's too late to believe. Unlike what you hear, by the way, this is not a case of FOMO. That's just so wrong. People think it's funny to say FOMO. These people have no problem missing out at all. They hate this market. The problem is that unless they run their own money, in other words, a family office, which is the case with the most revered bears, the so-called smartest people on earth, They simply don't know how to get bullish. That's right, blind to the positives. They can't figure out this market. It goes against their critical faculties. They think that you're a fraud if you switch direction. That's actually wrong, though, because you see, their investors have plenty of fear of missing out and expect their money managers, when they pay a fortune to pivot, change, direct, be flexible. They aren't paying huge fees to miss out, which means that between now and the end of the year, when the reports come out about how they did, these bearish managers are going to have to at least pretend to be bullish and put some money to work, because otherwise investors will pull all of their money out. How will they be so ideologically determined to stay bearish? Right now, they're being barraged with the question, how much Oracle do we own? Surely we owned Oracle. No, they didn't own Oracle. It was selling at a very high multiple and was therefore wrong to own, at least for them. Second, there are plenty of stocks that are cheap right now that are going to be less cheap as they go up. These bears, though, they don't think they should be going up either. The stock of J.P. Morgan trades like a small-cap bank stock, just ripping through level after level after level, yet it still only sells for 15 times earnings. After the investors find out that they don't own any Oracle, they can ask, well, maybe at least own some J.P. Morgan, right? But the skeptics say, we don't own J.P. Morgan. It's an inflationary environment. They think they know better than we do. But the stock is the arbiter. Then there's the IPO market. The bears are looking at the number of deals and are saying, oh, man, the Wall Street IPO machine has gone crazy. But any market historian knows that that's simply reminiscent of previous good times. It's more of a beginning than an ending when you see these deals. The Wall Street promotion machine's barely gotten started. Go buy some Goldman Sachs. Then there's the research. As you might expect, when a stock has been going higher on nothing, it's going to catch a downgrade. This morning, Apple, the stock of Apple, caught one downgrade. It was hideous. After some analyst said he wasn't impressed with their new phones, and didn't like their the not-so-hot AI strategy. Now, in another tape, Apple stock would have been obliterated by this buy to hold. This one, Apple goes up $3. Finally, during less ebullient periods, whenever you get some good news in the morning, you can be assured something bad will come later in the day that you can hang your bearish hat on as the market sinks. No, not in this tape. Are you kidding me? In the midst of a typical update comes a story about, Jeff Marks sitting next to him. He says, hey, Jim, there's a takeover bid for Warner Brothers Discovery. I said, come on, they got so much debt. Not that long ago, the skeptics were shorting the heck out of this one because of that hideous balance sheet. They got the whole zeitgeist wrong. You see, in a bull market, that balance sheet's what has kept the equity valuation down well below where it should trade. To the owners of the potential acquirer of this company, Paramount Skydance, including the Ellison family, the one that owns most of the largest share of Oracle, this potential acquisition is just a rounding error. Larry Ellison is worth over $300 billion. If someone wants to buy Warner Brothers for $40 billion, he owns he has 300, someone wants to buy it for $40 billion, hey, what the heck? Could be good. Look, when you have that much money, you don't need to ask yourself that question. You certainly don't want to ask your kid that question. The moral of the story, when there is this much money sloshing around, okay, when there are funds and families with trillions of dollars being put to work, it's awfully hard to ignore what they're going to do with that money. The bears have probably made very little money going into September, which is supposed to be a very bad month. And so if they're going to invest, they want to wait at least till the market's getting smacked around. But it's not. The clock of the year is ticking. It feels a lot like the 90s, and they only have 4 months to hope that this market goes lower so that they can get in, even if that means abandoning their whole ideology. But the bottom line, if the bearish money doesn't pull the trigger soon and become buyers, their investors will go somewhere else. And then the bull market won't be the manager's problem anymore. Brian in California. Brian.
Booyah, Coach Cramer. Booyah.
Booyah, right back at you.
Jim.
What's happening?
Right on, Jim. I'm a first-time caller and a charter club member.
Yes. Let's make some money together, Brian.
Coach, I've owned this stock for several years now with nothing to show for it. What do I do, Coach? Buy, sell, or hold Airbnb?
Oh,
Thanks.
man, I've been looking at it, too, and I'm telling you, that whole class of equities from that period that came public, they're all on fire except for this one. I think you buy Airbnb. All right, listen to me. The clock is ticking on this year for the Bears, and if the market doesn't go lower soon, and they can't put their money to work, well, they're going to have to ban their ideology or abandon the idea of being money managers. On Mad Money tonight, healthcare has been one of the worst performing sectors this year, but Johnson & Johnson started to stand out from the group. I'm running through the reasons why. Then Axon, AXON, has been one of the great growth stories over the past few years. Do you know why? I think the outsized gains can continue. I'm digging into the company's latest numbers to see where it might be headed. And then how about this one? Keurig Dr. Pepper stock has gone from bubbly to flat over the past few weeks. I'm taking a look at what's behind the move, and maybe it is time to take a sip of the stock. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.